What's going on, wise investors? Welcome back to the channel. As always, we are here to help you build wealth through commercial real estate. So of course, a little cliffhanger. Which asset class is actually performing the strongest in spite of everything that's been going on post-pandemic and in the headwinds we're experiencing with this current economic climate? The answer, medical office buildings, or none other than what we like to call MOBs. MOBs just hit 92.8% national occupancy, while new construction has dropped to historic lows. So demand is booming and is really strong. Supply is tight. The challenges for delivering new product through new construction is extremely slow. And this is one of the reasons why I love medical office buildings. So let's break down why medical office buildings are the safest and smartest investment in real estate right now, today, and how you can take advantage of it. One of the things that I always try and do as a real estate investor is just remove the emotion that often finds its way into deals, into this industry, and allow data to drive the decision making. So let's dive into the data. First off, according to Revista and JLL, MOB occupancy hit 92.8% in Q4 of 2024. We saw outpatient volumes that are projected to grow 10.6% year over year over the next 5 years. And I think we can all agree that the medical industry is not getting any smaller or slower. It is only ramping up. New construction is at a 25-year low, just 0.8% of total medical office building inventory. And the harder it is to deliver new product to the market, the more people are going to be going after the same amount of supply. Q4 medical office building transactional volume hit $2.8 billion, with sale prices averaging $289 per square foot, with a cap rate on average at 7.1%. That is a perfect storm. Rising demand, tight supply, no new product coming online, and of course, stable and consistent income for investors to go after yield. Now, this isn't just speculative hype. This is data-backed performance. So why does this matter, and what makes medical office buildings unique? What makes them unique and different from other CRE sectors is a variety of things, but here's three key things. Number one, sticky long-term tenants. Healthcare providers often sign anywhere from 5 to 15, even 20-year leases, and they love to spend big dollars on their build-outs because of the specific needs of their various business models. Overall, the demographic tailwinds, an aging U.S. population, and shift to outpatient care equals what? Built-in demand. It is also a recession-resistant asset class. People don't skip medical visits in downturns. They need their medication, they need their medical services, and this is something that isn't going to be going away anytime soon, if ever. So, add in the fact that medical office building tenants are often backed by health systems or insurance reimbursements, and you've got one of the most secure cash flowing asset types in commercial real estate. So how can you capitalize on this? Let's talk about opportunity. Here's how smart investors are capitalizing right now. First, they target conversion plays. There is a lot of Class B offices that nobody wants to touch, nor do they know how to utilize them. There's also aging retail centers near hospitals that are perfect for medical office building redevelopment, and we're seeing a lot of capital get deployed into capitalizing on these opportunities. Next, look at secondary hot markets. Cities like Miami, Phoenix, Nashville, Salt Lake City are all seeing major medical office building demand with little new supply. So knowing that there are many markets around the country that have very little supply but very strong demand is a great way to get in front of some of those trends and capitalize on the asset class as a whole. Third is Partnering on syndications. If you are somebody that isn't active, can't go out and find these types of deals, well, guess what? Many medical office buildings are acquired by syndicators or by funds who specialize in healthcare tenant leasing. So if you can get in with those groups or with those types of individuals, right, and get in early with the right operators, you can ride the upside and ultimately protect your downside in a very stable and strong asset class. Now, if you're raising capital or building a fund, medical office buildings can help you balance the risk of more volatile asset classes. Personally, I've seen better tenant retention, more stable cash flows, and stronger long-term valuations in my medical office buildings than any of the other asset classes in my portfolio. Not as much forced value or upside always to be captured, but very safe and stable yield that can bring in the returns that you and or your investors are looking for. Last, I figured I would share one of my favorite projects, which was a struggling office building that I converted into a medical complex with a hospital, outpatient care provider, a little pharmacy. It had a physical therapy group in there, and then there was some vacancy still left in the entire building, which later on I was able to capture the value add through leasing this space up to a dermatology clinic. I was able to get up to 100% occupancy, drive more cash flow. We converted them over to triple net leases, which drove up additional net operating income and inflated the value of the asset. Now, the beauty was the management of all of this was extremely passive because of the way I structured the leases. These types of deals aren't flashy. They aren't always sexy, but what I can tell you is they are consistent and they are stable, and they are also in a market near you. You just have to go out there and find these types of opportunities. And in a market full of uncertainty, consistency and stability oftentimes is the edge that people forget about. So if you are sleeping on medical office buildings, it might be time to wake up. This sector isn't just getting started, and the data proves it. It is here to stay, it is stable, and it might be the sleeping giant that many people are overlooking. What are your thoughts? Do you like medical office buildings? Is there something else that is even better that I am missing? Drop a comment down below and let me know your thoughts. Don't forget to subscribe to the channel for more investor-driven commercial real estate breakdowns like this. Check out all the great links we have down below in the description. And with that being said, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.